Well, we have our wonderful staff to wish you a Merry Christmas and a Happy New Year.
Merry Christmas! Happy New Year!
All right, now we're going to shoo them off, and we're going to do our video for you, but we'll make it. We wanted them to say hello to you. All right, Monday's Christmas.
Monday's Christmas. Today is the 21st.
Yes. This has been a week that continues to, I won't say puzzle.
Are we on air?
Yeah, we are on there. This is live.
Oh, wow. Okay.
This is live. So get serious about it. We're serious now. This has been a week that has been one that still continues to bring surprises from the market standpoint, but continued statements from the Federal Reserve saying we're going to be reducing rates, but it ain't going to be as quick as you think it is.
Yeah, but that just a month ago, they were saying, what part of no do you not understand? We're not lowering rates in 2024. And here we are talking about lowering rates in 2024. Bizarre.
Yeah, you should know on this week, without being very specific, you'll see the specifics. And the reason we aren't going to be specific is because compliance says we can't be specific. But we have begun to make moves that we said we were going to make. The first move was in the bond piece, and we're moving out duration, meaning we're moving the bucket of very short-term bonds into two longer pieces of bonds.
Yeah, the day is fast approaching where our 3-month and 6-month Treasury bills as the fixed income centerpiece is going to change because yields are going to change. So we're going to have to look for a better yield by going out a little further on bonds, but we typically will pick up appreciation in those longer duration bonds that we purchase.
Those moves are underway as we speak. We then talked about equity, the equity side. And in the meeting this week that we made decisions, we agreed, let's let the bond piece settle. We then would regroup right after Christmas and see remaining cash and how the weighting of those bonds are. And then with that, we are going to move a smaller portion on average into the equity space.
Right. So we won't get specific on that because there's still 2 or 3 options that we have to purchase. So we haven't completely arrived at what those options are, but we will by after Christmas.
The move is ultimately to move us towards probably being weighted where we want to be in bonds and equities and cash fully by the end of the year. But we are going to do that on a very slow basis and pragmatic basis based on where the Fed is, the economic data, and how things are transitioning going into the new year. Yep. So that's underway. We have finished a good year. The numbers look solid from our perspective. I know it could have been higher, but we certainly did not take the risk.
No, we're not out of the woods yet.
Yeah.
You know, we're trying to thread the needle on because all this bad news didn't just go away.
Right.
It's still out there, but markets are going to do what markets are going to do. And as we've said many times in these types of videos and on our show, you can't fight the Fed.
That's right.
So we have to go with what the Fed is going to give us, and if they're going to lower rates, then we're going to have to move with it.
So from our staff that was with you before, Merry Christmas. From Gib and I, Merry Christmas, Happy Holidays, Happy Hanukkah. We appreciate you so much, but enjoy this coming weekend and Christmas on Monday.
Yes.
We are grateful for you.
And always remember, it is your money.
And your money matters.
Merry Christmas, Happy New Year.
Merry Christmas.